Hey everybody, how's it going? My name is Jacob Van Helden, and I am a agent here at Secure Insurance Group. And today, just wanted to do a real quick video with you guys to cover really the three main health insurance programs that we're seeing our clients enroll in. Just thought it'd kind of be helpful for everyone to see how to go through and run quotes for your clients, and then just I'll kind of briefly touch on who these plans are for, it's designed for, kind of the best fit, best kind of client to look for each of the programs here. If you do have any questions at the end of the presentation, I'll have my email up and everything. So if you do have any questions, please feel free to reach out to me, send me an email, and I can get back to you. And if you need me to call you, I can call you. We can spend a few minutes on the phone. But this stuff is really, really easy to do, and it's something that can really add a lot of income to you, especially with the marketplace coverage now. Pay out really, really well. Commissions are phenomenal. So we will go ahead and get started. So the three programs that we're going to cover today are the marketplace plans through healthcare.gov. Those are probably going to be some of the most common plans you're going to sell. These are the Obamacare plans, marketplace plans, whatever you want to call them. But these are major medical health insurance programs. A lot of people can qualify for a subsidy based on their income, and so that's a great thing for people as well. The next program we'll talk about is ShortTerm Medical, and ShortTerm Medical is a great product to either bridge the gap for someone who maybe is between jobs and needs some just catastrophic coverage while they're between jobs, or they even have programs that people run for the full 12 months, and so those are great programs. And then the third one we'll talk about is the Christian Health Share programs. There's one company that I'll kind of walk through, the most common one that we get people enrolled in, and just kind of cover the benefits of that as well. This is a great alternative to the marketplace for people who either don't qualify for marketplace coverage because they don't have a special election period, they're outside of the open enrollment window, whenever that may be, or they just simply don't want to deal with the marketplace plan because, if you do qualify for subsidy, there's some information that you have to send in to verify, so on and so forth. So for people who are, higher income, who don't qualify for subsidies, are outside of, a special election period or the open enrollment window, the Christian Health Share programs are great programs to look at as well. So we'll go ahead and get started here. So the first thing that we're going to look at is healthcare.gov marketplace plans. So as I'm recording this video, we are outside of the open enrollment window for health insurance. And so what we'll look at today is if you have someone who qualifies for a special election period, which there are quite a few. They've got a list of about, I think, 10 to 12 different things that are happening that would qualify you for a special election period. But this is the home screen, so you just go to healthcare.gov, and you'll see a lot of information here. The easiest way to just simply run a quote without having to create an account for someone and everything like that is hover over this See If I Can Enroll button and go ahead and click on that. And so the first thing it's going to do is have you put in your zip code. So I'll put in our zip code here in Springfield. And what we're going to do is we're going to see if you qualify for a special enrollment period. So we'll go ahead and click on that, and then we'll click Continue. This is just to let you know that we're not actually applying for health coverage. We're just seeing if we qualify. So you'll see here, there's a big list of things that would qualify someone for a special election period. I'm just going to click this top one here, which is, did you or anyone in your household lose qualifying health coverage more than 60 days ago, but since January 1st, or do you expect anyone in your household to lose coverage in the next 60 days? So basically what this is saying is, in the last 60 days, have you lost health coverage? Or in the next 60 days, are you going to be losing it? So this would be if you are changing jobs, if your job is, discontinuing group health insurance. This would be if you have group health insurance with either a current or a previous employer, and you've either lost it as it stands right now, or you will be losing it in the next 60 days. So we'll go ahead and click yes there. and then we'll scroll to the very bottom and we'll see if we qualify. So we do qualify, and so there's a lot of information here. Really the only thing you need is if you scroll down, under Start or Update an Application, you're going to see this Need More Information first, and the first button here is See 2021 Plans Before You Apply. So we're going to go ahead and click on that. And so now this is where we're actually going to go through and run a quote, okay? So we're going to put our zip code in here again. All right, so tell us about you and your household. Go ahead and click this green Start button. This right here, you can always skip past this. This doesn't have anything to do with a quote, so we can skip this. So now we're going to start filling out information about the household. So what it's going to ask you is basically how many people are in the household to start, because a large factor of what determines your cost and what your plan looks like is your household income to household size ratio. So the income is a very, very, very important aspect of the marketplace health insurance, because your income determines if you qualify for a subsidy. So be sure that you relay that to your clients, that the income is something that is very, very, very important. It can really make or break what your plan looks like. So for those people who are maybe self-employed or work off a commission base and don't have a salary or an hourly set income, that can be a little difficult. So if you're working with someone who is self-employed or does not have an hourly or a salary position, and they work off of some kind of commission base or 1099, that can be kind of difficult for those people to estimate their income if they haven't been in business for 10 years and have a solid idea of what their income is going to be. And so in situations like that, I always encourage my clients who are in that situation to overestimate rather than underestimate their income. So if they're pretty confident they're going to make $50,000 this year, then in your quote, I would suggest maybe showing $55,000 or $60,000. Because at the end of the year, when everyone goes to pay their taxes and do their taxes, what the marketplace is going to look at is what you actually made. And so if we put in $50,000, but you end up making $75,000, there's a very good chance that you'll owe money back to the government. Where on the flip side of that, if we said, hey, you're going to make $60,000, but you only made $50,000, then a lot of times you'll see that you'll get a tax credit at the end of the year when you go to do your taxes. So, and that's something we can touch on. If you have further questions, you can always call me. I won't spend too much time on that, but it is very, very important to the best of your ability, estimate the income as close as you can, if not higher than what they're already expecting. So who's in your household? We'll do a family of 4 for this quote today. So we'll say you and other people. Are you married? We'll say yes. And do you have any dependents? We'll say yes, and we'll say there's 2. Okay? So now it's going to go through, and now we're going to put in the information about the household. So we'll say the dad is 30. He's a legal guardian of a child under 19. We'll say mom's, 28. And she's also a legal parent or guardian. And then we'll say the kids are 3. And 1. Okay. So real easy. So now it's going to give us a little breakdown of all the information we put in here. So you've got the husband, 30, legal parent of a guardian of a child under 19, spouse, 28, same legal parent or guardian, and then you've got the 2 kids. So now we get to income. So let's say between mom and dad that they make $85,000 a year. Okay. Now, income, when they look at income, they're going to look at your adjusted gross income. So be sure that you relay that to your client as well, that they're looking for adjusted gross income. They're not looking for net income. They're not looking for gross income. They're looking for adjusted gross. All right. So it's saying that based on our household to income size, so a household of 4 people with an income of $85,000, that they qualify for $708 a month of tax credit. Now, this is an estimate, so be sure you tell your clients when you send them these quotes, hey, this is an estimate. This is subject to change when we go and actually submit the application, because when you submit the application, there's a lot of information that they put in there that they're able to verify. So this is simply an estimation, but it is typically pretty close. I mean, we're not going to have a $200 or $300 a month subsidy difference unless, they decide that, we're actually going to make $100,000 instead of 85 this year. So now we'll go hit view plans, and you can look at this here. Quick tip for everybody. If you've got a family that qualifies for subsidy, I always encourage you to look at silver plans. The marketplace tiers their plans kind of like Olympic medals. So you've got bronze, silver, and gold. Your bronze plans are going to be the lowest tier plans. They're typically going to have the lowest premium each month, but your deductibles, your max out-of-pockets, your co-pays are typically going to be much higher. The reason I like silver plans is because, in my opinion, silver plans are going to give the client the best bang for their buck. So we'll go ahead and look at silver plans. Now, if silver plans are too expensive, then, it is what it is there. But I always encourage to at least start by looking at silver plans. So this is what your plans will look like. Obviously, it'll vary per person, where you live, what state you're at, income-wise. But let's just say you wanted to send a quote to your clients here. So in the top right-hand corner of each of the plan boxes, you'll see a compare button. So let's just take these top 3 silver plans and compare them. So now we'll come here, compare all 3 plans. Now, I'll be honest with you guys, the print version of these is horrible. It does not look good. It's not pretty at all. The easiest way I have found to send your clients the quote is up in the top, you've got these 3 options to send your quotes to your client. If you click on this link right here, you can literally copy paste this link into an email and send it to your client, and they can click on that link and it'll take them directly to this quote. They can see it, they can play with it. I mean, they can change things around, they can make adjustments, but to me, that's the easiest way to send a quote to your client is to, once you get to the compare plans, you hit this link button right here, you copy it, stick it in your email, send it off to your client, and that's simply the easiest way to do it. It looks the best. It's the easiest to read. So that would be my suggestion there. So this really was a very high-level version of running a quote on healthcare.gov. If you have any other questions, please feel free to email me at the end of the presentation here. I'll have a slide up that shows my email, but just feel free to email me. That's really the easiest way to get to me. So we'll go ahead and move on. I'll close these tabs out here. And the next thing we're going to look at is short-term medical. Now, short-term medical is pretty much exactly what it sounds like, as advertised. It is it's catastrophic coverage for a short-term time. So we can write these plans as little as 30 days up to 364. They can't say we can write up to 365, but we can write up to 364 days. Now, we have a couple different carriers that we work with in the short-term medical world. I really like United. Their short-term medical plan is really, really good. They have a slew of options. I mean, there's probably 100 different options to choose from based on, whatever the client needs. But so everyone will have their own login. I went through and I just went to the website. I'll just do generic quotes for you, but everyone will, once you get appointed, you'll have your own login to United Health One. You'll be able to, have your own back-end agent portal and things like that. But for today's purposes, we'll just do a generic quote. So again, we'll put in our zip. All right. So now we get into the information. So we're just going to say it's a male and then if they use tobacco, yes or no. Now, if you want to add a spouse or add a child, you can. For today's purposes, I'll just run an individual here. So now we'll click View Plans. All right. So they always try to package bundles in the beginning for you. If you want to sell them these package bundles, you're more than welcome to, but typically it's easier to piecemeal everything together. So they sort their plans lowest to highest premium typically, and your lowest premium plans are typically going to have the highest deductibles and highest coinsurance percentages. So at the very bottom here, I mean, for $41 a month, you can have coverage. It's okay, but I really like looking into getting down into like the $5,000 deductibles. So you just have to scroll down and keep clicking the see more plans until you get down into the plans that I typically suggest, because a $10,000, $12,000 deductible on the front end is pretty high for some people. So if you start looking here, now we're getting into a little bit more manageable plans. So short-term medical is catastrophic insurance. It is not meant to cover your routine visits. It's not meant to cover any of your basic stuff. This is catastrophic coverage only. So this is for someone who is not really going to the doctor that often. If they're using this as their health insurance plan for the year, you've really got to ask some questions and make sure that they understand that this is simply catastrophic coverage. There is no prescription drug coverage. There is no doctor coverage. There's very, very little maintenance coverage. It is simply, if something catastrophic happens, it gives you a cap of the amount of money that you're going to have to spend. So this plan right here, this short-term medical value, it's got a $2,500 deductible, a 70/30 co-insurance, and it's $97.84 a month. So if you wanted to send this to your client, again, you can just click the compare button, and let's compare a couple here. Let's do 5,000 and maybe another 2,500 here. Okay. Well, maybe. Okay, well, we got two here. So if you hit this compare right here, so now it's got your two plans side by side. And now you can kind of play with them a little bit. So if they like this plan, but they want maybe a higher deductible to lower the premium a little bit, you can go like that, and it'll reflect up here at the top. So it dropped about $20 a month. So this is where you can kind of change everything up. Their out-of-pocket max, if you want to drop their out-of-pocket max to $5,000. Okay, now it drops to $82. So you see how you can kind of play with a little bit. And then on your months of coverage, these plans will cover, these are 6-month plans. So they have some plans that they call tri-term, because each term on these plans is 6 months. So they have what they call tri-term plans. So if someone's really looking to use this as their health insurance plan, then you can enroll them in a tri-term plan, which will have them enrolled in the plan for essentially 18 months. Or if they just want to, roll with it. I've got a client of mine that every 6 months, he's happy with the plan that he's got right now. So every 6 months, we just continue to re-enroll him. And the reason he does that is because he's in the process of looking for a job, and he's looking for a job that has health insurance. And so what we've done right now is basically put him together a program that will cover the big stuff for him, but he's not committing to a full 12 months where if something happens in a shorter amount of time, we don't got to worry about, canceling and getting money back and so on and so forth. And then if they don't want this coverage to start until, the beginning of the following month or whenever that may be, you can put that in there. And when you change this, so let's just say we wanted to start this February 1st. What you'll see is your end date will also reflect 6 months out. And then you can send them the brochure, benefits, all that good stuff. Easiest way to send this, honestly, is just copy and paste it into an email or into like a Word document or PDF, and then send it off to your client. So that one's pretty straightforward. If you have any other questions about this, if you want to go into more detail, just send me an email and I'd be happy to kind of show you. And then the final piece that we're going to talk about here is the Christian health sharing programs. So I have gotten into the one that we sell a lot is with a company called OneShare. And everyone here, if you look here, I'm logged into Brian's. So everyone will have their own specific link that they can log into and sign your clients up. But when you get into the homepage, this is what your agent portal is going to look like. And to run a quote, in the top left box there, you'll see this website, and everyone will have their own individual website, own individual quoting link. You can actually send this out to your clients. They can enroll themselves. It's really awesome. But if you click on this, this is what will show up here. And all you'll do is you'll pick the state that you're in. So we are in Missouri. And you'll hit go. And then what we're looking at, and then you've got these 3 different plans here. So you've got 1 share classic, 1 share catastrophic, and then 1 share complete. Now, the classic plan is probably the one that we sell the most of. It's kind of the, if you want to compare it to the marketplace plans, the classics are kind of the silver of the Christian health sharing program. So catastrophic would be considered kind of your bronze, your complete are your gold. But the one that we enroll the most people in is the classic. So if you come down here, the orange button to enroll, click on that. And then first thing we'll look is put your client information in here. Okay, so you'll fill out your information here. If you want to add a spouse, you can. If you want to add children, you can. So the next thing we're going to look at is our effective date when we want to start this. So let's just say we want to start this February 1st. Now they have 3 tiers of plans within the classic. So you have your basic, your enhanced, and your crown. That's really going to vary based on the type of coverage that they're looking for. We can go into the specifics of how these cover. If you need to, I can send you a brochure and it breaks down everything really great. But for today's purpose, we'll just look at basic. And then with these Christian health sharing programs, they use different verbiage than what we are used to using in regular health insurance. So ISA, which is individual sharing amount, is essentially your deductible. So that is what the family is responsible for on the front end. So in this plan, you've got a $5,000, $7,500, $10,000 option. We'll just do $5,000 to start. Now, there is an application fee. It's $125. The only way that you can bypass this application fee is if your client is already on a Christian health sharing program. So this is 1 share. There's another program called MediShare. There's another program called Samaritan Ministries. So let's just say that your client was on MediShare and they wanted to change to this plan. Well, since they've already had a Christian health sharing program, you can wipe off this application fee. But if the person has never had or is not coming off of another Christian health sharing program, then they must pay the application fee. Okay? So you'll see here, it's got this on. So we'll update. And now it's going to show our rate. So for this individual, a male in Missouri, born in 93, this individual will pay $194.97 a month plus the $125 application fee. That's just the very first time they make their payment. So their initial premium payment when they go through and start this plan will be $319.97, and then every month thereafter, as long as they have the plan, it'll be $194. So if you want to send a quote to your client, again, they don't really have an easy way to do it. The easiest way I do it is just copy paste this page right here into a Word or a PDF document and then share and then email it to your client. But that's pretty much at a high level, kind of a mile high view of the 3 main health programs that we enroll people in. The marketplace being kind of our go-to if that person is eligible to qualify for a marketplace plan. So when I'm recording this video, we are outside of the open enrollment window for the health insurance marketplace. And so in order for someone to get marketplace coverage in the middle of a calendar year, they do have to qualify for a special election period. If they do not qualify for a special election period, then that's when we pivot to the short-term medical plans, the one share plans, the Christian health sharing plans. And what's really great about that is, let's just say we enroll them in any of these plans that you enroll them in. There's still a lot of gaps. There's still a lot of coverage gaps that they could potentially have some higher out-of-pocket costs for. And so that's when you can start looking at products like hospital indemnity. That's when you can start looking at products like cancer, heart attack, and stroke, or critical illness policies, or accident policies to supplement a lot of these plans. The guy that I had told you about who's on this short-term medical plan here, he's got his short-term medical plan, but then he also has a hospital indemnity plan so that if he's ever hospitalized, he can use that money to pay towards his deductible. He's got a cancer, heart attack, and stroke plan, and then he's got an accident plan. And so he's carrying 4 policies, but each one of those policies kind of plays off of each other and kind of gives him as close as we can get him to quote-unquote major medical health insurance. And so there are a ton of cross-selling opportunities when you're talking to your health insurance clients. We will definitely do more training videos on when and where those cross-selling opportunities come in. We're going to be doing videos on hospital indemnity specifically, so be sure to check that out. But that's really all I've got today. So if you do have any questions, my email address is right here. It's just jacob.vanhelden@secureig.com. Please feel free to email me anytime. If you would like to set up a phone call, just send me an email and we can get that set up, and I can spend some more time with you going more in depth, because we covered a lot of information in a short amount of time. And for some people, I know there's some people out there who need a little bit more in-depth training. And so if that's something that you do need, just shoot me an email and we can schedule a time to do a screen share or just visit on the phone. But if there's anything that I can do for you guys, like I said, don't hesitate to send me an email. Give us a call here at the office, and I'd be happy to help anybody out. But health insurance is definitely a great product to be able to offer to your clients. It really lets you, have clients for a lifetime. If you get someone, a family enrolled, and they're all in their, late 20s, early 30s, they've got young kids. Well, you potentially have, clients for 40 or 50 years. So if you have any questions, again, please feel free to reach out, jacob.vanhelden@secureig.com, and just keep an eye out for more training videos as they come.